Unbelievable! Are you looking for a no-nonsense property and business podcast? Our mission is to provide jam-packed content straight to your ears, where we can add value and unpick the fluff in the industry. If this sounds like a bit of you, then strap in and hold tight for an episode with Heidi and Dan.
Welcome to another episode of Unbelievable Property Podcast. Today we have James Green from Green and Green Mortgage and Protection. It's not the protection you think, looking at him being 6'7" and probably about 18 stone. He's not a bodyguard. It's more around,
if requested.
Yeah, it's more about protection of your mortgages, insurance and critical illness. So James, welcome to the podcast, mate. You've obviously been on my other one. You're a regular presenter at Humberside PPN. Now we're on here to share your story. So tell us a bit about yourself.
Yeah, I'll tell you my story probably for the 10th time, I reckon, Dan. You can probably tell it better than I can.
I can recite it
word for word. Been advising for 6 years now. Like most mortgage advisors, I fell into it. I've not met anyone that leaves school setting out to become a mortgage advisor, which is something you just fall into. But it all started really from when playing professional rugby. It'll be 8 years ago now. Bought my first buy-to-let. Loved the process of that. Wanted to do the management. You guys on the first hand how difficult management is. Not something you can dip your toe in. So I naively thought it's something I can do around rugby, finish training at 1, go manage a bit of property, do it all again tomorrow. Don't work like that. So natural progression for me was kind of the numbers side of it. Really enjoyed that, and I thought that's something I can do while I'm still playing rugby. Use the rugby platform to start advising, build up a client base, and retired fully from rugby 2.5 years ago. Now this is my full-time job.
Fantastic. Brief overview. So, James and I used to share not an office, but we were next door, weren't we? We were neighbours.
You should share my coffee and my mugs and everything else.
That's a lie. Just your printer until I bought one. To be fair, obviously we met back in, I don't know, it was pre-2020 or 2019. I slid into James's DMs. I was looking for a mortgage broker.
I thought he was going to leave that bit out, and I was going to call you out then. Yeah, Dan slid in my DMs years ago.
I slid in James's DMs. I thought, who's this tall, handsome lad? Oh, no, that's me. But slid in his DMs because I needed a local mortgage broker, and went for a coffee and met up. And obviously you were doing it part time, alongside your rugby, and then you're an award-winning business now, hundreds of clients, 5-star reviews. The business has gone from strength to strength, not only just on revenue but in terms of reputation in the area as well. So it's a credit to you. But I also think I always ask this question to people who are like athletes and at the top of their field. Do you think that being a professional athlete has benefited you in business? And if so, why?
Oh, 100%. So many reasons. I think thick skin, for one. I've been a mortgage advisor, but then being a self-employed mortgage advisor are completely different. Knowing how to do the job and then how to fish for business, how to feed yourself, are two different things. That's definitely helped, but probably just that competitive nature as well. And then the discipline to do more than what's requested, more than what's expected to get to the top and stay there as well. So everything that I do now, I don't think I'd have that mindset and that ability if it wasn't for rugby.
Yeah, it's important to know. And I think, like you say, is you can come off the back of a bad game and then go into the next game and absolutely blitz it. And like you say, it's about that mindset. And I guess I'm not comparing mortgages to rugby, but you can get told no or lose out on a potential case, but it's being resilient enough to be like, well, next one is brand new, we'll go again type thing. And the structure, the discipline, the organisation, which is extremely important to run a business, isn't it? To talk us through where you were now and what's Green and Green look like now.
Like I said, award winning. So we've won numerous awards over the last few years for customer service. That's something we're really big on. Being a mortgage advisor, we're all trained to give advice the same way because of how heavily regulated we are. And we all have access to the same lenders with the same basket of products. So what separates us from other people is how we deliver that, how we help people, how we explain things, and matching up the right solution to the right problem. There's 3-4 of us in the business now. We did have more than that, but we had self-employed advisors who possibly weren't cut out for it, weren't doing enough. It wasn't for them, so they've moved on. But we're now at the minute actively recruiting for another administrator. We've got one at the minute. Anna, bless her, she's ran ragged, so we're getting her some help. So we're hopefully interviewing next week for an administrator. So by the time this goes out, hopefully we've found somebody. And then looking to
I'll
take
get my
on another.
CV in now then, before the application's shut.
Yeah, don't people just like see me and think, oh yeah, I'm not working for him. So yeah, hopefully get the administrator off the line, and then hopefully another advisor back end of this year to help me with my caseload, basically. So yeah, so it's looking like it's going to be a good year, hopefully. Touch wood.
So are you looking at? Obviously, you're trying to get someone in to take over your caseload. So what's your next steps? Are you looking to be more strategic and, CEO, MD role, business growth strategy?
I've not actually thought that far, I still like being hands-on, still like advising, helping people out. What I'm looking at this year with the 2 new hires will be allowing me to be able to step away from the business a little bit. Like prime example being, if I go on holiday, unless I've stacked up a ton of work for Anna and the others to do, everything pretty much stops. So we've had to change the marketing so the leads come to the business rather than me as an individual. Another administrator to help Anna, so if she's ever off, again, that workload continues. And then that other advisor hopefully will be able to pick up the phone to any inquiries that come in while I'm away. And again, things keep rolling when I'm not here. So it's more lifestyle changes this year, getting people in so that I'm not working 80 hours a week and dreading having a holiday. So
65 of them being on hold.
yeah, love being on hold to lenders that then hang up when you get on the other end.
Well, that's annoying. I can obviously vouch for you as a mortgage broker, and I frequently send you voice notes about these crazy things I'm trying to do. And to be fair, you've pulled out some right blinders that I was convinced was never going to happen for me personally. So how do people actually find you? What's your ideal process? Because I just infiltrate you with, can you help me, James, please, at 10 o'clock at night?
To be honest, I'm happy to speak to anybody. I see myself as a problem solver. So like the weird and wonderful stuff you come to me with keeps me on my toes, and I really like that. We like helping first-time buyers because that's where we add a lot of value. But I do like the complex commercial stuff, like trying to get deals to stack, because it's not just one size fits all. It's okay. We've got a hurdle here. How do we get over it? How do we find a solution? So I do like that sort of stuff. What really gets me out of bed is when you get someone that's used another broker before and they've been told no, or they've gone to the bank and they've been told no, and they come to us and we manage to pull something out of the bag. That's what really drives me. But no, keep that weird and wonderful stuff coming.
Yeah, you do commercial now, don't you?
Yeah, so that's something we went into last year, kind of like, again, natural progression from what we were doing anyway. A lot of the investors we worked with were going into some more weird and wonderful deals rather than just single family lets. We had people wanting to buy stuff at auction, which is nigh on impossible with a normal mortgage. So we can now do.
You did it though. You did it in 28 days on a normal mortgage.
I did.
That's
yeah. Yeah, I'm not doing that again. This guy rang me.
He was like, this geezer's just bought a house at auction and he wants me to get a mortgage in 28 days. I was like, no.
So this guy I was chatting to did a mortgage in principle. He was like actively looking for houses, and it went quiet for about 6 weeks. So I just chased him. I was like, "Oh, how are you getting on? How's the house search?" And it's like, "Funny you should message, because I've just put an offer in on this." And then he sent me the link to the auction house.
Oh.
And I was like, just before I could get it out, it was like, and I've paid my $6,000 reservation fee. So I was just like at my desk like this, like, no, what have you done? So I went back to him and I said, by any chance has this got 56-day closing terms? He was like, no, 28. I was like, okay then. So yeah, we managed to get it done, but it took everything me and the solicitor had to get it done. I mean, there was nothing to lose.
Find that solicitor? They're very rare.
I have no idea how they managed it. I can't remember who he used, but I hope he tipped them because we got the mortgage offer within 2.5 weeks, and the legals was done within the 4 weeks. How I'll never know, but I've done it once, and I'm not doing it again.
I was going to say, so you don't fancy making that your little niche then, dear? Because you could clean up on that.
Well, you probably could, but you're trying to find this niche of people buying auctions, then people that don't really know how auctions work, people that jump in with both feet, and then,
everybody.
Need you to pull them out again.
Yeah.
You could do like a little triangle, you, the solicitor, and the lender, and just clean up these people at the auction house crying and go, we'll sort you out.
Yeah, we've got another one.
Yeah.
Pull them out with some tissues.
Yeah, but going back to the customer service piece, obviously delivered value there, but I use you various times, and I've always referred you on, and everyone I've referred you to has always come back and said, James has been great, or whoever it was dealing with has been great. You sorted out, just even giving advice. Like my mate's dad who lives in Australia, they're Australian but had a house over here. They lived over here for 20 years and put him in touch. You guys gave him value and sorted him out. He managed to sell it in the end. He wasn't locked into any rates, just in terms of the advising piece. And I think, although he didn't remortgage or do anything with you, he still got that value. And he came to me after, was like, oh, do you know what? Like, credit to the people
Well, that's the thing. Like, first and foremost, it just comes down to helping people. Like, yes, we get paid for the advice that we give if something goes through, but the underlying principle is we're just here to help people. So whether we help you now, we help you in the future, or we don't help you at all, if we can give you a little bit of advice that makes life easier, then that's what we're here for. But yeah, I mean, you were instrumental when I first started my business. Obviously doing your stuff, the people you've referred me on to. There's one guy that you've referred me on to. I'm still doing work for him this day.
Who's that?
Well, I'll tell you afterwards. I don't know if you want me to share his name, but he's still coming back time and time again for some pretty good stuff for us. So I think putting client first, it has its rewards.
Definitely, and like you say, if you give that value, people, that there's no reason for them to leave. I was chatting to one of the investors who bought 2 properties off me, who's now buying one in Essex, local to them. I don't know if that's who you're talking about, but I was chatting to him the other day, and he said, "Oh, I've gone back. James is sorting me out again," and stuff like that.
Yeah, it could well be him. He's now moving house himself, so
and that. So like you say, I mean, you say I was instrumental, but it's down to your business and ethics and your value in it. I was just giving you leads, you closed them, and people are still coming back to you. So
like a magician, really, it's quite impressive. It's like, oh, I want to buy these £2 million block of flats, and you're like, here's a bridge and loan. I'm like, fucking hell, like,
this is happening.
I genuinely expected you to be like, fuck off, you idiot. But no,
you do see that, like, you see people and they do all this creative shit. Like I remember sitting in my first like property networking meeting, thinking I'm a property sourcer, like not having sourced the fucking thing, not a buy to let to my name, like wet behind the ears. And I remember sitting there and people talking like, oh, this person offered me 20 grand to do this, and I did this deal. And you think, what the fuck goes on in this world? Like, literally. Yeah. And then when you're immersed in it, like when people say, I did this creative exchange with delay completion and then bridge to let and this, and you think, oh, that's quite a cool deal, isn't it? Like, you just become a bit desensitized to all the stuff that goes on. But like, in terms of brokers and solicitors, are like, can be worth their weight in gold in terms of getting a deal over the line, structured right, as well as making it financially viable.
I think the biggest thing I learned was learning what to say yes and no to. When I first started out, it was, you want to say yes to everybody, and then you start looking through it and you're just like, you get all the documents and there's no lender on earth that's going to lend you 50 quid, let alone £500,000.
Can you share any insights on that? So if obviously you've got a listener and they're going, oh, I want to reach out to James, what's the sort of stuff that you do get a no to?
Yeah, so I think buy to let wise, it's having that deposit. A lot of people, even on the commercial side, still assume a 10% deposit is enough to buy a second property with, whether it be buy to let, commercial, something like that. So deposit's the biggest barrier for most people. On the commercial side, it's more the exit. So like all the deals that I've looked at, getting in is not a problem. It's how are you going to clear it, or how are you going to get onto some long-term finance at the back end. That's the biggest thing for some people. Or some people see a property again commercially. Oh, that looks really good. That not really sure what they're going to do with it. They just see like the listed price. It's like, oh, it's dirt cheap. If I can get it, I can do something with it. Lenders want to know what you're going to do with it. So you need to have a pretty detailed plan of what you're going to do. So that's one thing I found on the commercial side, was you do get a lot of, for lack of a better word, tire kickers. It's like, oh yeah, this looks really good. I've seen this online. It's like, well, it does. It's been sat there for a while because there's a lot of people like you that don't know what to do with it. So that's probably one of the biggest things, is having that exit strategy in mind from day one.
Is it exit with numbers and analysis, or just I'm just going to essay it, or do you have to prove and demonstrate what you think is going to happen?
So you need to be able to document everything. So, but when I say buying, it's the easy bit. You would probably buy something that's not fully functional at the moment with a bridging loan. All the bridging loan company cares about is, well, we're going to put a charge over that property. Is it worth that? Right, great. Yes, it is. Then the second one is, well, how are you going to pay us back? Because we're only going to give you this money for 12 months. So how are you going to pay us back? That's where people start to get stuck, because I had a lady who was looking to buy a property in Bridlington. It was a pub downstairs, restaurant, and then like 13 hotel rooms. So I was like, brilliant, I can help you buy it. You've got the deposit, I can get you the bridge. How are you going to get off that? And then she was like, oh, well, I've run a pub before. I was like, well, that's great, but what sort of figures is this pub going to generate? Oh, then we'll do the rooms upstairs. Like, again, that's great. What income are these rooms going to generate? And because she couldn't give us those figures, we couldn't put a deal together, because there was no way of working out if she can finance it all. And then when we did run the numbers on the remortgage as well for the commercial, like mixed use, the mortgage payment's like $4,500 a month. So I was like, you're going to go into this brand new business that you've never done before, and you're already $4,500 down every month before you've even opened your doors. You need to think about this.
So can you get like a mixed use mortgage, or do you have to title split?
No, you can get mixed use. Again, this is where it gets a little bit more complex. Depending on the industry and the usage for it, that'll depend what sort of evidence you need to put forward. So if it's purely going to be for investment purposes, take those block of flats that you mentioned earlier. What rent do those block of flats get? Well, that one's fairly straightforward. You go back to this one in Bridlington, it's like, well, what's the pub income going to generate? What's the restaurant going to generate? If you're renting out the rooms, what they're going to get per night? What occupancy rate do you expect? So in that situation,
it's a business plan, isn't it? You have to put a business plan forward, really, for this, to prove revenue and forecasting, by the sounds of it, for them.
Yeah, that's what catches a lot of people out. It's like, I had another guy, he bought a property at auction, so it was like an office downstairs, and then he was going to turn the upstairs into like a 5-bed HMO. So I was like, okay, so that's a mixed-use mortgage. You can have it all on one. And then he was like, well, I'm going to set up a letting agency, and I'm going to run it out of the downstairs. And I was like, well, you've never been a letting agent before, so that the lender didn't have much confidence in you staying there for a while. And you're going to have to pay rent on paper to satisfy the lender. He's like, well, I'm not going to charge myself rent. And I was like, no, you're going to have to provide something for the lender to okay this. And yeah, that deal fell through. So like I say, getting in is not a problem. It's getting out that causes the headache.
Yeah, that's really useful, to be fair, because a lot of people, again, when I'm deal sourcing, a lot of people are like, oh, I've seen this. And I'm like, yeah, cool. What are you going to do with it? So actually, from a lending point of view, that's really useful to know.
Well, I think what people don't realise is they're like, oh, the lenders, this is their job. And it's like, well, flip it on its head. Imagine you've got £500,000 and you get Steve off the street who was like, oh, I've got this business idea, I'm going to do this. I was like, can I have £500,000? You tell him to get on his bike. He'd be like, no, because you're not going to pay me back. Like, yes, they take a charge over the property, and if it really goes belly up, they can take that off you. But that's a lot of work for them. So they want some as close to guarantees as possible that they're going to get that money back.
Yeah, definitely. But yeah, it's just helping them, and I guess it's what you're probably also doing is preventing people ending up in shit dire situations by taking out these loans. You know, if lenders were lenient and going to offer these, like you're that middleman to say, look, looking at what you're doing, don't think that's going to work.
Yeah, and you have to be the bad guy sometimes, because you're like, pissing on someone's parade sometimes. Like, oh, it's a really good idea, and then you're the one that poo-poos it and tells them it's not going to work. And I think I don't speak to many other brokers. I live quite a sheltered life when it comes to that, but I can imagine there's some brokers out there that will do the bridging loan. So yeah, I'll help you buy it, and then when you get stuck, it's like, oh well, you didn't ask me about that. But yeah, I like to sleep at night, so I don't want someone stuck with this massive bridging loan that they can't repay, because that bridging loan company will take a charge over that and other things, and it can get quite messy. So yeah.
That's good then, and that's probably why you've won awards as well. And with this is a question I get asked a lot, and I know back in the day you had to be a buy-to-let landlord first for a year before you can move on to HMOs, and now I think there's a bit of lending, isn't there, where actually you can go into HMOs first. If you did that, what's the criteria for that? Is there anything specific people need to know?
Yeah, so again, you're limiting your options there, because there are, that I can think of, two lenders that would.
Kent Reliance just announced they're doing first time for HMOs.
Yeah, I think Precise are one, and then Kent Reliance are the other one. There might be some other weird and wonderful lender out there, but yeah, unless you go for them just for that, the main criteria would be, if you're not a buy-to-let landlord already, you have to be a homeowner. So you can't be renting or living with parents and going straight into a HMO. There's got to be something else before that, whether it be buying your own home or being a landlord. Again, I think Precise or Kent Reliance, there might be a minimum income requirement as well, personally. 25 or 30 grand a year without looking. Yeah, they would be the main two.
So if you say for example, you're a young rent-to-rent operator with a lot of income coming in a limited company, do you still need those guarantors to do that?
You wouldn't meet the criteria, because if you're doing rent-to-rent, physically you don't own the property. So yeah, you would need to be a homeowner or a landlord already. So I see why the lenders do it, and how we explain it is, well, lenders want to be able to see that you can manage a simple residential mortgage or a simple buy-to-let mortgage, like kind of cut your teeth that way, prove to them you can handle that before you go straight in at managing an 8-bed HMO with no prior experience.
Yeah. It's the same as well, because like me and Dan have spoken about property trading on numerous different podcasts, and I see people who, I've just done commercial to residential, and it's like, yeah, and they think they're going to buy like a huge building, chuck it into residential and get lending on it, and I'm like, no.
Yeah.
It's like so hard.
Easier said than done.
Yeah, well, yeah, but it's hard to listen to as well. You think, sure, okay.
But bridging's the same though. Most bridging lenders want you to be a homeowner before you start dabbling with something as like complex as a bridging loan. So yeah, I mean, I don't know if it's my old-fashioned approach to it, but I would always look after myself before I start doing something else. Like we've got some investors that have remortgaged their own house to pull money out to go invest, which is absolutely fine. If you're happy to do that, by all means, go for it. I'm kind of that attitude where, well, my house is my castle. I don't mess with this. If I pull money out of something, I pull it out of my business or I pull it out of another property, but I don't mess with my own home. And I think lenders are kind of the same thing. Like, yes, they're happy for you to take money out of your own home, but that's where the more checks come in. Where if you're doing it on a buy-to-let or something else, the tests are a little bit more lenient.
Yeah, I know as well. I like, because obviously we talk about a lot of investments on these podcasts, but like if we've got a first-time buyer listening or someone who wants to buy the home for the first time, what should they be looking at if they want a mortgage?
So again, a residential mortgage, that comes down to you and your personal circumstances. So what deposit have you got, your income, your credit score. So yeah, I would always recommend checking your credit score before you do anything, like making sure your credit file's clean and things like that. But speaking to a broker as well, we put a post out the other day. I had spoke to 7 different lenders for one woman, and she had one set of situation, spoke to 7 different lenders and got 7 different outcomes. So rather than go to your own bank and they turn around and say no, always speak to a broker, because if you go to your bank, you might be trying to fit a square peg into a round hole. If you don't meet their criteria, you don't meet it, and there's nothing you can do about that. Let a broker speak to a different lender for you. But my advice would be to try and get to a 10% deposit if possible. A lot of lenders will do 5%, but not all. So you want to keep your options open to try and get to 10, open up all your options, and then you can pick who's going to be the best fit for you.
Yeah. That sort of leads me on to a couple of questions that I have, and more about Mythbusters. So I see a lot of posts like from yourself and others. One of the most popular comments, and we had it as well when we were buying a new build, you've got to use our mortgage broker in-house.
Hate that one. Hate it.
You just edge now.
So estate agents and developers, some are all the same. I'm saying some because not all do it, but if you ever hear it's best to use ours, it'll go through quicker, it'll go through smoother, it's bollocks. By law, you can use whoever you want. Essentially, what they're doing is they get a kickback from that broker or that solicitor, so they will apply pressure to you for you to use them because they'll get a couple of £100 out of it. As I saw a good post on LinkedIn about it, actually, is get them to put it in writing. So if they say that to you,
this is what I'm referring to. Yeah,
get them to put it in writing, because if they put it in writing, they've incriminated themselves. So, like, obviously, being a broker, I follow loads of other brokers on LinkedIn. So as soon as one person puts it, everyone's jumping on it. And yeah, there's a few out there. Like, by law, they can't do it. So if they ever put it in writing, yeah, they've incriminated themselves.
I wish we had an agent on the podcast where we could go, over to you. So could you lose a sale due to this? And would you be willing to, just for a couple of £100 kickback?
Well, that's the thing. Like, if you're an estate agent and you're charging, if you're charging a percentage, that's where the bulk of your commission comes from. So why risk ruining the relationship for £100 because you're going to get that from the solicitor? It's just not worth it.
Yeah, I think the high street agents, like traditional agents and stuff like that, I think, a lot of it is a race to the bottom. We don't work on the consultative basis like the Americans or the Aussies in terms of how they sell property. It's a race to the bottom, especially like in Hull, $750 to sell a house or 1% minimum of X, Y, and Z. And I think that's probably why people are trying to really push these mortgages for the extra 100, 200 quid, because it's like in management, the maintenance and the tenant fines and the additional fees is where you make your money, not in the actual thingies. And 1 in 3 sales don't complete. So an agent gets paid upon completion.
Well, is it is it Strike that don't charge at all?
Strike, Purple Bricks and Strike. Although I did see a post the other day, they don't charge. However, it will still cost you like up to 900 quid or whatever, because it's like £89 for a right move thing. Then there's so many hidden costs in it. So although they say it's free, it still costs you like £1,000 to get in. And I think I watched. I read an article a few years ago. I actually posted about it on my Facebook page. Purple Bricks had £40 million worth of clients' fees of unsold properties, because they get paid up front. So you pay like 999 quid, like 995 will sell your house. You do all the marketing, you list it online. One, the photos look shit because you still got your fucking fellas' slippers in the corner and, your kids' shitty nappy on the floor over there. And then, like, photos obviously sell a house, so then it's not marketed properly. And then what's their incentive to sell it?
Exactly. Like, we're the same. We charge a fee for our advice, but you're not paying for our time. You're paying for our experience and our knowledge. And we charge on offer. So until we've actually done what we set out to do, you don't owe us a penny. We're in it together until you get the outcome. But I don't know if you saw my LinkedIn post of the day. So I had actually lost a client to a big national firm who I won't name, basically because they'd not looked into his case properly, and they just took the headline rate. This is the cheapest option there is, and he's like, "Oh yeah, I've gone with them, and they're not charging me a fee either." And I was like, "From what you've told me, I found that mortgage product, and you don't qualify." And he was like, "All right." I was like, "Have they sent you an illustration from the lender?" And he was like, "No, they've just told me the interest rate and that." I was like, I'd ask for that, because I don't think you're getting what you think you're getting. So long story short is he sent me it back, And I was like, yeah, that's not getting approved. I was like, that's for an existing customer. And then 2 days later, he sent me the mortgage offer. What they actually put through wasn't what they told him. It was a higher interest rate. And they'd not run the
Is that not
affordability
unethical?
calculation either. So he'd applied for like a mortgage of 145 grand, which is what I'd found him. And then because of their affordability calculations being stricter, his mortgage offer, which they'd approved without telling him, was for like 120 grand. And I was like, so you've not got what you've applied for in terms of the loan amount or the interest rate or the incentives. And the actual interest rate that they've given you, which they didn't tell you about, was more expensive than what I quoted you. But because I was going to charge you 250 quid to do it, you've gone to this national firm and it's all just blown up in your face. So he's ringing me tomorrow because now I'm going to do his mortgage for him, which I should have done for him in the first place 4 weeks ago.
Charging double.
Yeah, I'm
charging double.
That.
This is a fucking penalty for being stupid.
Been a knob, yeah.
Stupidity costs.
Not bad penalty.
So yeah, that 250 quid. Well, he'd have paid me 250 quid. I'd have got him an extra 20 grand on his mortgage, so he can pull 20 grand of extra equity out, and I'd have saved him a month of his time as well for 250 quid.
Fucking hell, you charge cheap actually, James. You need to go up there.
I know, but for people like him, you should double.
Yeah, but in terms of like paying a fee, so that fee it's like it's for your services, your knowledge, your expertise, and get what you charge. You save people like hundreds fold. Like when you do your post about someone will pay you whatever your fee is for a remortgage, but then you save them an extra 200 quid a month on their interest like mortgage payments, and then cut their loan down by like 8 years. You know, so when you think 400 quid to save tens of thousands, it's a no-brainer, isn't it? But people, I think especially in Britain, like we want everything now. It's all instant gratification, and we don't see that delayed gratification and that benefit. Like for me, obviously I haven't used you in a while just because I haven't been buying recently, but like you had our details on file. We'd give you the details of the property purchase price. You come back with like, right, this is the best illustration based on X, Y, and Z. Yeah, go ahead, James, we trust you. And then you deal with everything. All you have to do is walk next door and say, sign that paperwork. I'd sign it. And then it's off my desk. I don't have to deal with it. And that's what I think paying that money is worth its weight in gold, because you don't have to deal with, going to your bank, speaking to your lender, like you was talking about a minute ago.
Or if they decline you, go down the street to the next bank and to the next bank to the next bank. But I mean, I've got some investors that I've not spoken to in person or on the phone for 2 years. They just send me an email. This is the property I'm buying, or this is the one that I want to refinance. I know exactly what it is that they're looking for. But yeah, no worries. And then later that day, they've got a mortgage recommendation. They look at that and go, yeah, let's bang on that. Let's go with it. And no phone call, no Zoom meeting, no catch up. I've got all the details anyway. It just becomes automatic. But like our best clients are those that are busy, those that are quite successful in what they do. They've got a decent income. So people that are high up in their job, self-employed, then they see the value of paying an expert. It's like, yes, I could look myself, but I might get it wrong. It's going to take me ages to do it. I'm going to have to do all this chasing, or I can pay them 500 quid and they'll do it for me. Like that broker fee for us pays our admin costs. We have administrators that package your case, push it through, progress it. That pays for them. The commission we get pays for our advice, or vice versa, whichever way you look at it.
Yeah. How quickly can you turn so say, for example, I ring you up tomorrow. Hiya, James, can you help me? And I've given you everything properly because I'm a good client. How quickly can you get a mortgage offer to someone?
Well, that's the biggest thing that you just said there. If you give us everything, so we get people that are like, oh, I want a dip. I was like, we've not sent me all your documents. Like, I can't do it. So if I've got all the documents, we've had our meeting. We try and get it turned around within 24 hours if we can.
That's awesome. That's really good.
Most lenders give you an instant decision. So you go on their portal, put the information in, and it spits out a yes or no. So it doesn't take that long. Sometimes, if it's a bit of a complex case, it might get referred to an underwriter for them to manually look at it. In that situation, it might be like 2 or 3 days. But worst case scenario for us, we turn it around within the same week, because I like to go into the weekend with a clear conscience to be able to enjoy my weekend.
That's good. I think self-employed people, I like to finish a Friday and go, I'm done now. I'll pick it back up on a Monday.
Yeah, I mean, Fridays are quite a long day for me because I go to a networking breakfast every Friday. So it gets like 12 o'clock and it feels about 7 o'clock. But yeah, I think because most people get an early finish on a Friday, that's when they send the documents or they've got the time to ring me and see what's going on and stuff like that. So Friday is quite a busy day for us normally.
I try not to work a Friday or any day.
You're your own boss now. You can do what you want.
I like now. I've just been in Derby today and I sat in Wetherspoons for 6 hours. So
nice. Steaming.
I was drinking Diet Coke, to be fair, because I had a drive, but I've now got all my messages to catch up on. So I'm like,
Nice. I've gone back the other way. I'm 9 to 5 / working evenings / do whatever. Gone back to slogging it in every way possible how I used to.
Well, I'm not working evenings because I'm working with you, so it's like great.
That fucking piece of shit, yeah.
How was your electric car?
Yeah, just it's all right if I want to do my job and go locally, but if I want to do anything over 150 miles,
is that all you got?
I've got real range is probably about 150 miles. So like if I go to drive home to see my parents and that, I'll go see my mates. I took my car once. I went to my cousin's wedding in Maidstone in Kent. I got to Peterborough Services, and then all the chargers were full, so I had to go find like I found somewhere nearby, and it was a 50 or 150 kilowatt charger, but it was charging at like 20 kilowatts an hour. So to do a full charge, it would have been like 2.5 hours.
Oh.
I didn't need a full thing, so I got enough charge to get to Kent.
This sounds so shit.
It gone from like 4 hours to like 6 hours.
Is that on a good day as well, or is that when it's cold?
That was like a warm day.
Oh, wow.
Cold, it's even worse. So the manual, I read the manual. I didn't read the full manual. I'm not that fucking sad, but I looked at the range, and it was like real range in the weather in like the winter with the heating on and stuff like that is like 135 miles.
Well, you're not selling this to anybody, I'm afraid. If you was a salesman for
if
electric.
You're gonna use it, if I was working in Hull, just to and from all the time, didn't ever have to go on a long journey or anything like that.
Yeah, it's a really good car unless you want to drive it anywhere.
So if you want to leave Hull, you don't get it.
Yeah, it's a great car to leave on the drive.
Yeah, and then obviously you charge it. You get a special like EV rate, like 10p a kilowatt or 7p a kilowatt. But yeah, it's good for like local, just running to and from and charge it. It is a lot more cheaper than like filling up diesel and petrol and stuff.
To be fair, I've got a VW Transporter that's diesel, and it's like if I'm just tootling around the town, absolutely hemorrhages diesel.
Yeah, well, I had a 2-litre X3 and it fucking running around the hole. I was just like filling it up every 3 days.
Yeah, mine feels like it's just got a hole in the bottom. If I'm like,
what's your range, James? On yours, you got the A8.
Q8 e-tron. So yeah, on a good day when it's hot, 250 miles. At the minute when it's cold, about 200.
Yeah, that's decent. Yeah, warm day is probably about 180. It says 220, but it never does it.
I can charge it up for free though at work. That's the main reason I got it, and all the tax
sounds
advantages.
Depressing. Should we move on?
Yeah, don't buy an EV car.
I thought mortgages were bad at interest rates. Then you spoke about electric cars now, and it's like,
yeah. Give us a market update, James. What's going on in the world? Bank of England just
hit us up with a market update, please.
Remain there. Kept the rate at 5.25 again.
Yeah. In all honesty, I don't see much change in the base rate for the rest of this year. The only way rates would start to come down is if inflation hits the target 2% inflation for the year and stays there. I think it'd be too early. I think if it hits 2%, everyone's expecting it to happen and rubbing their hands together. But I think it would have to sit. Inflation would need to sit at 2% for a while before they start to go back down the hill. So yeah, those people that are sat on the sidelines waiting for this to happen, this is fairly normal now. If you look at a graph of the base rate up until COVID, we sat around 4 or 5% anyway. The only reason it went to 0.1 or 1% was because of the financial crash in 2008. Then after that, it started to creep up. Then a little thing called COVID happened. People, it was either put rates to 0.1% or people lost homes, businesses, you name it. And then we're starting to creep back up again. I mean, I'm 33 now, and I don't look it. The crash happened when I was 17, so I've only ever known really low interest rates. So people can be forgiven. But yeah, this is fairly normal. So I think we just need to live with it and plan accordingly. I think
the 300-year average from when they started recording the Bank of England rate is 6%. So we're still below the 300-year average.
That's it. We've got a graph about it. So we get those like first time buyers like, oh, I'm going to wait until it goes back down. It's like, well, just let me just show you this graph. It took 300 years to get to this point. So if you want to wait till then, give me a ring when that happens, and my his grandson might sort it out for you.
Yeah, and it's interesting because, like I said, we've been spoiled. But because people always say, "Oh, in the 80s it was fucking 16%," and you're like, "Yes, but you earn $5,000 and your house was 25 grand. But like people earn 25 grand and the average is 260. So it's gone from a 1-to-5 ratio to a 1-to-10 ratio. So it's doubled.
Yeah,
so it's less affordable in terms of that respect. The salaries haven't gone up proportionate to the house prices, but again, it's still. And the thing is as well, it's never the right time, is it? If you're going to buy a house, like when is the right time? Like if the interest rates shoot up and there's loads of inflation, then that's eroding your debt on the mortgage anyway.
Well, it's like any changes the government make are going to take time to take effect. Like putting interest rates up every month for 4 months, like they did, don't affect people that are on a fixed rate mortgage and fixed in for the next 2 or 5 years. Like put them up as much as you want. Don't impact me until 5 years from now when I'm actually renewing my mortgage. So it takes time for these things to happen, which is why after 18 months of base rate rises, we're starting to see inflation come down. And people saying, well, there's talks of the government bringing out 1% deposits. That'll have the opposite effect. That'll drive prices even further because every man and his dog can buy a house. So that gap between wages and house prices is only ever going to get bigger because we're on a small island that isn't growing. We're running out of space. Population's getting bigger. People are living longer. People are getting divorced more than ever. So there's more people that need houses, and there's just not enough of them. So until that
planning systems fixed, it'll never change. Houses being built. The planning system don't allow for new houses to be built.
Well, what did they say? Like, was it the Barker report where they're like, we need to build 300,000 new homes a year just to meet demand? And we've never hit it once since the report was done about 20 years ago. So the problem's only got worse.
I was reading an article as well, and they was like, Conservatives like, we're going to do we need to do 300,000 every 3 years or something like that. And then Labour come in and was like, we're going to do 1 million every 3 years, and it was like exactly the same, but they've just put it over a different term or like vice versa. But yeah, we've never achieved that, and there's various reasons why, obviously, but like planning.
Well, there's your other problem. Like a government's only in power for 4 years. What can you actually get done in 4 years? Like if you want to make some lasting change, how are you going to implement that in 4 years? Like you can't just decide today we're going to build 1 million houses and expect in 4 years' time to have built 1 million of them. It doesn't happen like that.
It's like that accountability. Like I will moan about this. I can't sack me now. But when I worked for Shelter, their mission, bear in mind we was a homeless charity, was to build 96,000 houses a year. I went, where the fuck he got that figure from, for a start? Yeah. And I said, second of all, who's building them and where?
Who's funding it?
And third of all, yeah, and how are you holding whoever they are to account?
Yeah.
And then there was like, and then they said to me in a meeting, and this helped me hand my notice in. Well, it doesn't matter even if we just achieve 5%, that's good enough. And I went, it fucking isn't.
If we build 5,000 of the 96 we set out to build, that's okay.
Yeah, exactly. And it's about being realistic, like 1 million. Where have you got 1 million from? And then also the difficulty is like, I went to Derby today and I passed about 15 huge empty boarded up properties, and I said to the person I was with, what's happened to these? And they went, oh, they're on compulsory purchase orders because they're building a bypass. And I went, 15 houses sat empty, and without boring people into submission, but the empty homes policy, there's loads of empty homes all over the place, and there's one in my town that's been empty for 30 years. It's only like a 3-bed terrace, 30 years it's been empty, and it's like, just take it off that person and fucking put something in it.
Yeah.
So,
Well, I just on the empty homes thing, I bought 2 empty homes, but there's a few things that you got to watch on empty homes. So the 2 Silverdales that I bought, one was empty for over 2 years, and one was empty over 5 years, like classed empty. And then what they do, the councils put, I can't remember the word, but they basically, there was a 200% council tax levy on one of them, and the one that was empty over 5 years was 300%.
Ooh.
So buying an empty home that has been vacant for a long period of time, that then goes to you. So on day one, they was going to start charging me 500%.
It's ridiculous.
Or like 200% on one and 300% on the other. But I basically put a class letter together, an email to them saying, part of your regeneration plan of Hull is to, and I quoted their stuff off their regeneration plan for Hull.
Smashing people with their own quotes.
Yeah, yeah, I love it.
My favourite.
Yeah, Karen, I was like, you're trying to, regenerate Hull, do this, blah, 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 bring in empty homes, here's your empty homes policy. But, investors like me trying to, bring these properties back to life, you're penalising us, blah, blah, blah. Waved it. I was like, fucking get it.
Wrongly worded letter.
Saved hundreds of, and then I sort of had I appealed business rates recently as well, and they let us off $8,000 worth of business rates and refunded us 700 quid.
Nice.
I am Karen.
This should be your side hustle. You should just write strongly worded letters for people as a side hustle.
And I also got all the stamp duty back on Silverdales as well. So not only did I not pay council tax, I didn't pay any stamp duty on it.
How did you get that back?
Because they're uninhabitable. You get a refund on no kitchens, bathrooms, the roof was falling down. It was uninhabitable. So
you take the roof to prove that point, though.
Yeah, I threw a grenade in, just blew them all up, and then
smashing the boiler about.
But so there's many ways you could get stamp duty relief. One of them being multiple dwellings. But here's a tip. This is what I didn't know. One we bought for 36.5 and one for 37. Now both of them technically don't qualify for stamp duty because they're under 40 grand. However, if you buy from the same vendor, it's classed as what you call a linked transaction. So that meant that what you do is they put the property value together and then give you the stamp duty on that. So the 3% of, 72 or 71.5 grand. So we were actually liable for stamp duty, despite them both being under 40 grand due to it being classed as a linked transaction.
Interesting. Do a separate podcast on that.
Nugget of information there.
Love it, nuggets.
Full of it up there.
You are. We'll do a separate episode on that because there's some different tax reliefs and stuff would be interesting.
Yeah, we'll have to get a tax specialist on because I'm not qualified. This is just my own experience.
We'll get a tax specialist after your experience chat. But is there anything else, James, you want to add that we haven't spoken about?
No, I think we've covered market update, preparing and refinancing, things like that. So, probably just speak to a broker is probably the underlying advice I can give because every deal is different, every situation is different. Don't listen to the guy down the pub because legislation and regulations change all the time. So, get some qualified advice before you do anything.
Unless it's you in the pub.
I speak a lot of sense after 10 pints.
10, and I'll be dead. We just to throw you under the bus here, we like to do a charity shout out when people come on. Is there a little charity you want to give a shout out to, or your favourite charity at all?
Oh God.
Normally I prepare people for this question, but I haven't.
No, that is an ambush, isn't it? Possibly the Daisy Appeal. We know some people that work at the Daisy Appeal, and they're doing some pretty amazing work at Castle Hill Hospital in Hull.
What's that? What do they do?
So what they do is they've got a new unit at Castle Hill now where people can go for scans. What they do is they inject people with a radioactive tracer. So rather than just go for a scan and you might see a couple of abnormalities where you've got cancer, this picks everything up. So even the smallest bits of cancer, it'll tell you exactly where it is, gives you a really clear picture. So that's helping people catch cancer really early and beat it. And now they're also testing for dementia as well early on. So it should be able to help catch that early and hopefully with advanced medicine, prevent and cure dementia eventually.
That's a good shout. Is that can you do that privately, or is that a referral thing, or if you feel unwell, like how does that work?
So both. So it goes through the NHS. So if you get referred through your doctor or the specialist, or if you go through private, again they'll refer you on. So yeah, somebody I know, he's going. He's had some abnormalities on a blood test. So yeah, he's going through that next week, and hopefully that should catch things nice and early for him.
Yeah, cool. Thank you for that. I didn't know about that.
My pleasure.
Good luck to your friend. Brilliant. Well, thanks for joining us, James. It's been a pleasure. Always a pleasure. Never a chore with you, mate.
It's quite a vanilla subject, isn't it? Mortgages and stuff like that. So yeah, I tried my best.
I think make it really cool though, so don't worry.
Yeah, it could be a vanilla subject, but it's got to be done right, because especially if you're buying your home, your first time home, you don't want that experience tarnished by 1, having a shit broker, 2, having a shit solicitor, 3, paying a stupid rate or property and being on the wrong products. Like, that's just going to ruin your experience. So yeah, reach out to James Green. We'll put his details in the link. We'll put his details in the show notes. So yeah, reach out, and I'm sure he'll deliver his exceptionally world-class service.
Don't think me up too much.
Like a wizard. You are a
You're on
wizard.
this pedestal now, James. Brilliant.
Unbelievable. Thank you for joining us this week. We hope we added value to your day. Stay tuned and see you next time for another unbelievable episode. See you next time.